So moderating today's panel is going to be our Aleo developer advocate, Laisha Wadhwa. And no need for individual clapping. We also have Natalie from FoxWallet. Thank you, Natalie. Okay, Jim Thompson from Bitwave. Hey, Jim. And then Nika from Hinkal. Hey, good to see you in person finally. Great to meet you. All right, we're chatting today about how private cross-chain payments work. And off to you, Laisha.
Am I audible? Yeah, okay, perfect. I'm excited to talk about privacy and cross-chain payments because that's been the narrative, but I'll first give all of the speakers a moment to introduce themselves and give some context on what they're working on, and then we'll dig in. Go ahead.
My name is Natalie. I represent FoxWallet, so I'm a business development from the team. FoxWallet itself is a decentralized multi-chain Web3 wallet that is available on Aleo as well as other 85 different networks.
Jim Thompson, the Chief Revenue Officer at Bitwave. We're a digital asset finance platform, so specifically focused around accounting, tax, compliance, and more recently, B2B payments, which we'll talk a little bit about today.
Hi, I'm Nika Koreli. I'm CTO at Hinkal. Hinkal provides privacy suite for DeFi transactions. We are based on Ethereum and EVM chains, and it's a suite which includes our DApp SDK, which allows private transfers, and wallets that allows arbitrary transactions on EVM chains.
Well, thank you for the introductions. I'd like to start with setting some context on what do you feel or how would you personally define financial privacy in the context of blockchain? Whether it's ZFi, is it regulatory importance, or what do you feel financial privacy entails? And why do you feel it's important? Any one of you can start.
So I'll mostly talk today from the lens of businesses and corporations, because that's what we're focused on. Really B2B payments, so think like accounts payable of businesses, enterprises wanting to pay their vendors. So Howard alluded to it earlier, but in the context of privacy for this, it's really about somewhat matching what they have in TradFi today for B2B payments. So if they want to embrace the opportunities that are on the blockchain with stablecoin payments that are cheaper, faster, better, how can I do that in a way that actually makes sense for my business? So we can expand on some of those themes today, but they've talked about competitiveness, the compliance piece, obviously. But even as Howard talked about, we were talking with Rich from Google. They're publicly traded. Ironically, the more scale they have in accepting stablecoin payments, the bigger issue that there is around privacy and people having visibility into things that they actually can't release until quarterly earnings and things like that.
Okay, I define financial privacy generally on blockchain as consists of two components. It's true anonymity, so your UA never leaks chain, or all the transactions come from different addresses, so your transaction never links with each other. And second thing is privacy of mempool. So I was writing bots for MEV extraction, so I know how your all transactions are scanned, and also builder proposer separation by Ethereum is also, there are some questions there. So true encrypted mempool, I think, is a second real component of financial privacy on blockchain.
I'd probably add a little bit because as a wallet, it's probably a little different for us, but at the same time, if you think of what the guys have just mentioned and how it previously as well, it's not, I think it's, well, it is super important for corporations and companies and stuff here in terms of ZFi, finance, privacy. It's also important for us as members of the Web3 space, because let's be honest, very often we get paid in digital assets and stuff, right? And it's kind of, it reminds me a bit of how very often during the conferences you would hear stories that somebody got scammed, somebody just was cornered, and all those assets were stolen. Because obviously, we're kind of targets, everybody can see what's happening in our wallets, and that's why people either assume that, they can get things from us or how much they can actually get from us, right? So actually it's also for our own safety, to be fair, because let's be honest, the industry is developing, there are more and more people. So it's super important for us as well, just to keep ourselves safe while we're also keeping the users safe and the corporation safe and everybody safe.
That makes a lot of sense. Just extending on what you said, Natalie, I'd want to understand what do you feel is the role of wallets in kind of driving the adoption of cross-chain payments? And also, when we talk about cross-chain payments, there can be some sort of hiccups for users. So how do you balance the usability with the financial privacy as well as compliance?
Yeah, so I think for the wallet, it's actually crucial, and wallet is crucial when it comes to this, because obviously as long as we have the right third-party infrastructure when it comes to cross-chain payments or even the networks. Like for example, so as mentioned, FoxWallet is a decentralized wallet. It has Aleo plus 85 different networks. So for us, it's also super important to build bridges between all these networks, have the interoperability. Because if there's none, then we we sort of have like all these silos. Like, okay, you have all these networks, but how do actually users interact with them seamlessly? So that's when bridging comes in place, and just generally like user experience, user interface. Like you have to make sure that the user has access to all their assets across all the networks right at once. They can see them all, and at the same time they can also move them all. Yeah, so obviously it's super important to have these like any third-party sort of infrastructure that the wallet can integrate. Because for us, it's quite hard to develop absolutely everything by ourselves, right? So as long as there's that, I think it's a perfect multifunctional, versatile platform for a user, where they can have access to all the networks. They can, they want to have it private. Okay, they go to Aleo, and they have public transactions, they have private transactions, and they have a choice. Compared to other networks when they only have one choice, basically no choice, if you think about it. So wallets are crucial, and cross-chain is crucial for the wallet, because obviously, like, this, again, the space is developing, you have so many different options, and it's important that the wallet provides all of them to the user. This is how you sort of also attract the users as well, give them more options. And sorry, I forgot the last part of the question, probably.
It was just more about how do you balance the usability with the security aspects that you provide with privacy?
Well, so in this case, obviously, as you have a profile on the wallet, right? Obviously, you just have two choices. Yeah, it's either public transactions or private transactions. You just convert between them. At least that's how it works on Aleo. So this is, I guess, what, it's the whole usability of it, right? Because you sort of give the option, and yet, since Aleo, basically for us, it's a little different when it comes to compliance, in the sense that as long as the network is compliant, then actually we are too, right? Because obviously Aleo is working a lot on that side, right? Because it's a privacy network. So as long as they are in that sense, we also do that. And obviously also we work a lot on the security side of it. So we have like layers of protection on the wallet itself, when it comes to any like bad players, any fraudulent transactions or websites even and stuff. So obviously we work on that. But that's not even, what's the word? Like, that's non-negotiable, let's say. So we have to inbuild that way before we do anything else.
Yeah, so I would like to talk about problems of cross-chain private payments on public blockchain. And the main problem there is what is the effect of like when finality is broken on one chain. And it's a difference between public transfers, cross-chain transfers, and private transfers. By definition, finality shouldn't be broken on chain, but it happens. Like it happens with Ethereum. It was broken once, said by Natalie himself. And let's think about the effect what breaking finality entails. For public payments, cross-chain payments, it's a local effect. The liquidity provider on the source chain may lose his funds. But what happens when we talk about the transfers, private transfers between different blockchain? The effect of when finality is broken is global. So when you privately transfer from one shielded pool to another shielded pool, and the finality on the source chain is broken, the problem may be that the whole pool can be contaminated, corrupted, and any liquidity provider may not withdraw his funds from the shielded pool. So by failing transfer, cross-chain transfer, private cross-chain transfer, you're corrupting whole privacy pool. And I just want to say that you need additional security measures to prevent this kind of cases. And that's a main problem when we talk about cross-chain privacy rather than within a chain privacy.
Got it. Just extending, Jim, if you have anything to add.
Yeah, I mean, it may be interesting to folks. Interoperability is a real issue as we try and scale up B2B payments in blockchains. And if you think about what a lot of folks think of as the lowest hanging fruit, it's FX payments, right, in B2B. And those challenges of moving from bank to intermediary to currency actually kind of mirror some of the interoperability challenges. So if we don't solve for them, I'm glad we have smart folks like yourself working on it, then we don't have a story to tell, right? We can't say, hey, move to crypto, move to stablecoins, move to Aleo, move to this because you're going through bridging, you're going through all these different mitigation risks that then they're gonna say, this isn't actually better than my status quo. So it is really important for our use as well.
Apart from the interoperability challenges and just the finality aspects of transactions, do you also see there are regulatory challenges in tracking these cross-chain payments from a blockchain perspective?
Yeah, definitely. And it was interesting. I mean, the first speaker talked a little bit about like some of that compliance checks happening at the time of payment and then that audit log and how some of those could move over. I think I agreed with some of what he said, maybe disagreed a little bit, and maybe it's just a matter of timing when that will take place. But certainly at Bitwave, we provide the subledger that is that audit log. So whatever's happening on chain, that company needs to be able to go to PwC or Deloitte and say, here's what happened in a really granular way. And if they can't do that, they simply won't be able to do it, right? I mean, if they can't meet those compliance challenges. So there's some that can happen, at the time of like a KYC check and things that can happen on chain. But regardless of what happens, even if the blockchain serves as somewhat of an audit log because it's a blockchain, you still need that to interact with your traditional systems, and you still need it to be visible and readable by like a Big Four auditor. Because if the data is there but they can't read it, that's either going to be not acceptable or a very high cost or both.
Do you want to add anything?
Yeah, just short comment. So compliance cross-chain should be harder because it involves two chains, maybe two protocols, two shielded pools, or two separate smart contracts. So when you're a user and you want to certify, you're certifying from two sources like source chain and destination chain. So it adds up, so it multiplies by a factor of 2.
Got it. Now, I get that the narrative, ZeFi is solving a lot of problems, but I still do see that we are in the journey of mass adoption, and there are definite challenges. So in terms of individual problems that you are solving, right, how do you address the concerns from regulators and corporations or just institutions which are in a government setting regarding the privacy that ZeFi is introducing?
I'm happy to start. I mean, maybe one angle to take that we haven't talked about yet is beyond the value transfer. So obviously everyone's focused on moving money from point A to point B. You think about like a peer-to-peer transfer in Venmo, and I'll put a pizza emoji that says I'm paying you back for pizza, right? So my friend knows what it's for. In a B2B setting, obviously you need like a lot more information than that. You need invoice numbers, remittance information, things that will tie out. There are teams that are called accounts receivable departments that do a cash application process. I guess we can call that crypto application for this, but they need that information. So I think beyond, like we talked a lot about the value transfer, and that's what most people are focused on. For this particular use case, when you talk about metadata, additional data, and I'm really excited to be learning more this week and from folks at Aleo about how that can be encrypted on chain. Because right now a lot of it is moving the value transfer on chain, but having some of those processes just really remain in TradFi or remain in emails. And how can we make that even better, more efficient, and maintain the regulatory stuff that we're talking about here?
So for Hinkal, we took conservative approach towards compliance. We're also based in US, and we need to be in a good side of the compliance. So in our case, when you do cross-chain transfer, private transfer, the receiver should prove that he has either account on one of the centralized exchanges that passed KYC there, so he can withdraw the funds, or he needs to pass compliance checks within Hinkal's KYC providers. So our approach is conservative and targeted on institutional clients.
I don't have much to add because we're not US based, but there is a little thing though when it comes to wallets, because as the guys just mentioned, this is a lot about like invoices, KYC and stuff like that, a lot of bureaucracy involved. And the thing is, it's a bit of a problem for wallets because we're the centralized wallet, right? So that is a big obstacle whenever users hear you're decentralized, but you require KYC. What do you mean? Like, they don't like it. It's a massive setback for them. So I guess we'll end up trying to find a way to tackle it, to see it, or at least educate the users that even the fact that you have to go through a KYC is still keeping your personal information private. But even with that, yeah, let's say if it's an American citizen and then any other country's citizen, it's very, very different, to be fair. So for the wallets, probably later on, it will be another discussion. But at the time, nothing, there's not much for me to say, to be fair.
Got it. Now, I understand that from an onboarding perspective, the whole KYC process, let's say for a second we iron that out and there's a seamless experience. Do you still see there are any challenges in doing cross-chain private payments for the end users? Or do you feel we're at a stage that it is abstracted enough that they won't understand the difference, whether they're doing a private transaction or it's just another transaction?
I think in terms of private transaction, well, we were at the booth for the past 2 days, right? And a lot of people, they come and actually ask, and they're like, so what is private? What does it do? So that made me realize that most of the people don't really know what that is. So you just have to break it down, literally. Look, you have public transactions, you have private ones, you can move them and stuff like that, so you don't want others to see or that you have just paid at McDonald's, right? Or something like that. So education would be the key in this case, because I assume most of the people don't know, even those who are in the Web3 space, because most of the people still are more familiar with very, what's the word, like other networks that have been around and been just more marketed, let's say. Like everybody knows Ethereum, right? But yeah, with privacy, it's a little different. And I already forgot what I was trying to get to be fair. But yeah, overall, I think there's still a lot of frictions. And another big friction, in my opinion, is that if you talk to the local people here, they don't seem to be very positive about blockchain overall. Like, it's like, if we talk about Web3 space people, they understand, right? But locals, they were a little skeptical. Felt weird, but also if you think about it, imagine we are in the Web3. So for us, it's actually very convenient to make a private payment, right? We already have assets on the blockchain. What we have to do is just basically have the cross-chain payment and that's it, right? We're from from one point to another point, right? For people who are in the Web2, yeah, we want mass adoption, but how is that possible if basically they have to go from Web 2 to Web 3 and then make a cross-chain payment again back to the Web 2? So it's a loop. So we need to, first of all, educate the user why this private and decentralized payment is better. And second, probably think of some other perks that they can get out of moving from Web 2 to Web 3 without really knowing much about it. So that's at least how I see it, like how it would be, let's say, for my parents. Right? Like my mom, she would be like, why do I have to do it if I can just use my bank card? Why do I have to bother about it, right? So this is another friction that we have.
Well, I could go on and on this topic, and the discussions can probably stretch much longer, but being cautious of the time here, I want to switch gears a little bit and want to understand from a more longer perspective, right? What industries and specific use case do you believe could benefit greatly from cross-chain payments and ZFi in general, maybe next 5 years or 10 years down the line?
Yeah, so happy to start. I mean, I'll just give a real example. So I had a conversation yesterday with a traditional Fortune 500 company. They explored a few years ago of getting into the blockchain world, specifically around staking and kind of running some infrastructure. They decided not to do that, but we've kept in touch with them. We talk every so often. Naturally, we brought up payments, being here in ETH Denver. Their treasurer had thought about stablecoin payments, was something that was on their radar, they were familiar with. But even some of the topics that we're getting into today are like, 3 steps beyond that, right? Like they're still getting comfortable with like what is Bitcoin and what is a stable coin, and is a stable coin actually stable, and like how does that work and what does it mean? So I think, from my perspective with the Web 2 world that you're talking about, we have a long way to go. But the couple of topics that came up that were immediately interesting were certainly contractor payments that folks have talked about here, and then getting payments to really difficult geographies. So we're talking about certain currencies and certain geographies that were really difficult in terms of the time that it would take to move the money and the cost that it would take. And so that was really the lowest hanging fruit that we thought we could talk about, explore a couple pilots with. I think we're a ways away from like full-on domestic B2B payments for that kind of company, but you have to start somewhere. So I think those are a couple of the use cases that we're excited about to at least start to crawl, walk, run with some of the larger corporations.
Yeah, if we talk about real application, about cross-chain payment, I don't think there is like use cases per end user, but realistically what I see is that it will allow applications that cannot be created now. For example, if you go to Ethereum, is rollups, all this stuff, like for end users, it's a hell. It's very hard. And you cannot create good applications on one of the rollups because maybe nobody will come here because of cross-chain, what's going on upset now. And I'm looking more what will the infrastructure build with cross-chain allow for the end users. And I think with new interoperability solutions that's coming up on Ethereum, we will be able to navigate through the different rollups like we're navigating in Web2.
I just want to add 2 sentences. an interesting use case that I heard at the ETH Denver conference. So there were guys who started payments for like chains. So what they do, they work with the chains of like Chipotle and other like restaurants and stuff, and like Starbucks. And basically, when the user has to pay with a credit card, usually the merchant has to these organizations, they have to pay like what 3 or 4% commission, right? But actually, if you pay with the crypto through a network, the commission, they charge the commission only 1%. So the user doesn't really have to pay anything, which is fantastic, obviously. And for the merchant, it's also like saving at least 2-3% of commission. So technically, this is actually a good deal. The only thing is, it's very geographically limited, in my opinion, because in the US, using a credit card is actually extremely popular. If you go to Europe, not really any other part of the world, I don't think so, right? So that's a bit of an issue here. Like here, it would work out for sure. And obviously, you have to then work with every single merchant one by one, right? So that's another sort of friction, but it works. So yeah.
Our payments are more broken, so we have more opportunity, it sounds like. Applies for B2B and consumer. Yeah.
That's perfect.
Well, thank you so much for sharing all the thoughts. I think it'll be an exciting journey for the next 5 years to see how we go from using credit cards to, being private on the back end and not even realizing that we are doing it. And with that, we come to the end of the panel. Thank you so much for listening.
Thank you.